to the Lifestyles Unlimited Real Estate Investor Radio Show, a real estate investment program. Listen and learn how to use real estate to build wealth and passive income streams for you and your family. We bring you experts every day to discuss and answer your questions on everything from single-family homes all the way up to 600-plus unit apartment complexes. And now, the Lifestyles Unlimited Real Estate Investor Radio Show.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. A friend of mine mentioned to me yesterday that he is 3 weeks away from turning 59 and a half. 3 weeks away. And you're thinking, okay, so dude, when you do radio, you're supposed to start off with a big statement. You're supposed to catch my attention. How the heck does your friend being 3 weeks away from 59 and a half, how does that make that big intro that you're supposed to make when you're doing radio? Well, here's how it makes that big intro. Because my friend, who, by the way, is somebody that I told about Lifestyles Unlimited, who became a member of Lifestyles Unlimited, who went through the educational program, learned how to correctly invest into real estate, who has taken money that is not doing well from a performance perspective and reprogramming that money out of those underperforming assets into assets that perform so much better. And he's been doing that. He's gotten himself a couple of single-family deals that he has taken down. He's making good cash flow on those properties. He captured equity. He is doing everything he's supposed to do, and everything is doing what it is supposed to do for him. But he's 3 weeks away. 3 weeks away from age 59 and a half. So why do you suppose that is so important to my friend Bruce? Well, here's why it's so important. He's one of those guys that spent an entire working career. You heard me correctly, an entire working career putting money into things like 401ks, IRAs, other types of investment vehicles, all kinds of different things that were not real estate related. And when he became a member of Lifestyles Unlimited at the ripe old age of 58 and a half, and he went through our educational program, and he started to see the possibilities that real estate could create for him and his investing strategy, he realized he had to get busy, and he had to start reprogramming money. That's what Bruce is doing. And here's why 59 and a half is so important to Bruce. If he takes that money out today, he pays a 10% penalty. Yeah, he pays a 10% penalty on that money. Now, he's going to pay taxes on that money based on whatever his ordinary tax rate is. That's just the way these things work. That's the way all of these retirement plans work. And if you think that you're going to get to a date in the future and you're going to take all that money out and you're not going to pay any taxes on it unless you're in that one type of IRA that kind of does that, you're thinking incorrectly. You have heard information that is not correct. Taxes are due and payable on your retirement money, except for that one type that you're allowed to not pay taxes on, because you actually, I guess you pay taxes on the money as it went in. I don't know. You know what? I don't even care about those things. And here's the dilemma it's creating for Bruce. If you go back to, let's just pick a date and we'll call it September. The NASDAQ on September 3rd of 2021 hit basically an all-time high. Yeah, there's no other way to describe that. That is an all-time high of $15,380.07. That was the maximum amount. That's the last time the NASDAQ hit a high. And if you look back at what the NASDAQ has done since the pandemic, stock market's actually been behaving pretty well. But let's get into Bruce's shoes now. Because in September, Bruce has been looking forward to the date that he's going to start extracting money out of those investment accounts and avoiding the penalty. But look what happened since September 3rd. As a matter of fact, the NASDAQ, if you take a look at what the NASDAQ did on October 8th, now we're only talking about a 5-week difference in time. The NASDAQ actually hit a low. It hit a low for the trading range, and that low comes in at $14,181.69. So what does that mean? Well, that meant in a 5-week period of time, every share that Bruce owned in his retirement account went down in value. It went down in value. So if you look at what the NASDAQ did on September 3rd compared to what it did on October 8th, what you find is there's a 1,200 point swing. A 1,200 point swing in pricing. And I'll tell you what, that's got Bruce very nervous. Now, when I talked to him over the weekend, because we were kind of hanging out doing buddy stuff, we weren't doing real estate stuff, we were doing buddy stuff. He said, man, I'll tell you, this stock market's got me all panicked because I'm like 3 weeks away from being able to take my money out of my retirement accounts and not have to pay the penalty, and the stock market is going in the wrong direction. I am being materially affected by the fact the stock market is going down in value. And that becomes a big problem for Bruce. Why does it become a big problem? Here's why it becomes a big problem. For every share that Bruce had, his valuation reduced $1,200. Now, you might be thinking, well, $1,200, that's not a crazy amount, is it? Well, let's put it in perspective. What if you had 1,000 shares? If you had 1,000 shares that lost $1,200, what did you lose? $1.2 million. We come back from the break. I'm going to pick up on this thought. Stick around.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. Now, let's get back to your map to financial freedom.
Welcome back to the show. I am not suggesting to you that my friend Bruce lost $1.2 million in his investment accounts. I'm not suggesting that at all. That would mean that Bruce actually owns 1,000 shares of whatever is in his retirement account, which is most of it's in a 401k. That's what he told me. In those types of accounts, you tend to buy and you tend to sell fractional shares of stock. Yeah, I know it sounds weird. It's really a mathematical equation. It really is. It's a mathematical equation. So when your employer takes X amount of dollars out of your paycheck before they send you whatever's left over after you pay your taxes and you pay your Social Security and you pay your Medicare and you pay whatever allotments that you may have associated with your payroll account, all that money goes to buy those shares, the money that your employer kept out. And the problem with that is it's money. It's money that you've never had a chance to control. Now, you worked for it. You did. You worked your butt off for it. But when you went to work for that employer, when you were filling out your hiring paperwork, and they slid a little piece of paper in front of you that said, hey, congratulations! As part of your compensation package, you are being afforded Entry into our beautiful 401k. All you have to do is check this box, ignore the 15 pages of small mice print type, and sign your name. And what we will do is we will start taking money out of your account and we will invest it on your behalf so that in the future you will retire lavishly. Yeah, that's not how it works, though. Just ask Bruce. Now, Bruce didn't tell me exactly how many shares he owns in that 401k. And to be honest with you, I think if I had asked Bruce that question, I might have embarrassed him because I don't think he knows exactly how many shares he owns of whatever he owns. See, he might be buying into a fund, so he's buying fractional shares in that fund, and then that fund is buying and selling and trading shares of all these different companies within that fund. So Bruce owns ownership in that fund. Do you see how convoluted this stuff is? And here's the crazy thing. Bruce has been systematically reprogramming his money. He has been systematically reprogramming his money. And one of the things that I know Bruce talked to his mentor about, and I'm not Bruce's mentor, I'm Bruce's friend, and Bruce knows that, and he can always ask me a real estate related question, but I am not going to mentor him because he's my friend. He's my friend. I want somebody to look him square in the eyes and go, that's dumb. And I don't want it to be me. Yeah, I don't want it to be me, even though I've got that ability. But that's not my role. That's not my role. So one of the things that Bruce had discussed with his mentor was, all right, if we're going to tap into these retirement funds, should I take advantage of meeting with one of the lifestyles vendors that would help me to avoid the penalty? And here's what the mentor said. Let's take a look at the stock market. What's it doing? How's it doing? What is your potential risk for losing money between now and the date you turn 59 and a half? So if you go back in time and you kind of take a look at where the stock market was at about the time Bruce had become a member of Lifestyles Unlimited, and he was starting to go through all the educational components. Back when that occurred was just prior to COVID. It was just prior to COVID. So what was the stock market doing just prior to COVID? Well, I'm sorry. It wasn't just prior to COVID. I am incorrect in my assessment because I got my years wrong. Let me correct my statement because it's actually prior to COVID that I was talking to Bruce about becoming a member of Lifestyles Unlimited. Now I'm correcting the story because now I remember all the salient facts. And COVID hit and Bruce and his wife were like, fear factor, we're not doing anything until we see what's going on. And I was like, okay, you guys just keep your eye on me. Keep your eye on me and Tina. We will show you as we progress through the coronavirus era, and I'll tell you how it's affecting me as a real estate investor. Okay? So, I mean, that's where everything started with Bruce. So they kind of stayed on the sidelines. And we know what happened just prior to the coronavirus hitting. The stock market was it was starting to come out of kind of a sideways movement. And it was actually starting to make some upward trajectory. It was starting to move upward like you would expect the stock market to do, right? And then coronavirus hit. And what happened? Well, we saw that stock market just melt. Like in a matter of 4 weeks, we saw massive value erode from the stock market. I think the estimates were like 30 to 40%, depending on what index you're looking at, depending on what you're tracking. It doesn't matter any of that stuff, right? And of course, the whole country went into crisis management because we're dealing with an unknown. We're dealing with the coronavirus. We're looking at our financial markets tank. Nobody knows if they're going to be able to go to work. The government's telling you, wear a mask, social distance, stay at home 2 weeks. We'll get past this. And we all know what happened from there, right? Okay, so let's get back to that stock market. So the stock market actually, after about 4 weeks of just crashing, there were enough sane people in this country that realized this was probably more of a knee-jerk reaction to something we didn't absolutely understand yet, and that the economy itself, well, the economy is doing just fine. The economy is doing just fine. As a matter of fact, we have something called essential workers out there that are keeping the supplies flowing to our economy. And what did the stock market do? It rebounded. It did. I will credit the stock. Look, I am not a stock market hater. I am not a stock market hater. Sounds like I am, but I'm not. I'm not. I just think it's very, very risky to invest in the stock market, especially when you hand your money over to somebody else and you go, hey, man, you got this, right? Just give me my 8%. I'm good. So you got to think about what Bruce is thinking about during this whole timeline. Okay? So prior to coronavirus, I'm telling Bruce, you ought to become a member. Dude, this has changed Tina's life, changed my life. You and Leanne, you need to come on board and do this thing. And he's like really close to going, yeah, I think I see that you guys are not insane. Maybe I'll do this. And coronavirus hit, and he took a wait-and-see attitude. And I get that. It's totally fine that he took a wait-and-see attitude. And because he took that wait-and-see attitude, he was the beneficiary of the stock market actually coming back, which was a good thing. Now, there is a poison pill in all of this. When we come back from the break, I'm going to lay it out for you. Stick around.
Warning. Listening to the Lifestyles Unlimited Real Estate Investor Radio Show will change your life. We will teach you how to create wealth and passive income so you can be financially free. And now, back to your host.
Welcome back to the show. All right, so we're talking about my buddy Bruce. We're talking about him turning 59 and a half in 3 weeks. And we're talking about literally the last year and a half that he has been laser focused on his retirement accounts because Bruce has gotten to that point of maturity in his life. You know, way back when he was a younger man and he was in the Air Force, he wasn't too worried about retirement because he was going to get a pension. Know somebody else that was living that lie? Yeah, he's talking to you right now. So Bruce is a young man. He lists in the Air Force, and he makes the Air Force his career. And like me, Bruce had the opportunity to go through the transition called 9/11. And, of course, like everybody else that was in the military, the pucker factor went way up. You guys in the military know exactly what I just said. And the op tempo became beyond control. Yeah, beyond control. I mean, we were sleeping when we could, and it didn't stop. And it was the same way for Bruce. Same way for Bruce. I won't tell you what he did in the Air Force because it's really not important to the story, but I will tell you this. He sacrificed a lot for this country. And he is happy that he did it. He would not change any of his service to his country. But like me, he got to a point in life where he retired from the Air Force and he realized that that retirement pay, wow, is not as big as it seemed to be back when I was like in my 20s. And what did Bruce have to do? Well, he did the same thing that I had to do. He did the same thing that just about everybody that retires from the military has to do. Get back into the workforce. Now, Bruce is a little bit different than me. First of all, he was in the Air Force, so that should tell you that he's probably smarter than I am. Yeah, I make no bones about it. The Air Force got a lot of smart people in it. The Army's got a lot of smart people in it, too. Don't get me wrong. I'm not picking on the Army. I'm just giving credit to the Air Force. I mean, they're part of the team, right? So Bruce gets back into the workforce, and unlike me, he goes into the industrial military complex. He's a contractor. He works on defensive things for the Air Force. And that's all I'm going to tell you because I know his security clearance, and I used to have one of those. And to be honest with you, anything he does is none of our business. And I'll just leave it at that. Bruce started making very good money as a contractor. And he relocated his family from the great state of Hawaii, where he was born, to the great state of Texas. Because the contractor jobs, while they're available in Texas, they're not necessarily available in Hawaii, where he lived. As a result of that, he came to the mainland, he bought a house, and he started living life as a Texan. Over time, as he started making more money and started shoving more and more money into those retirement accounts, because he didn't know a different way, he built a house for Leanne and himself, which is a beautiful home. I have been to their home, and it's just gorgeous. And I'll tell you what, you want to talk about views? Wow. When you walk in their front door, you look across their living room, and you see nothing but expansive hill country views. It is absolutely gorgeous. Absolutely gorgeous. And what Bruce did was, instead of selling his last home, because he didn't have to sell it to buy the new one, he converted it to a rental. So when Bruce and I became friends, he had already owned some rental property, and we were kind of talking about, owning and operating that rental property. And, he was telling me some of the things he was doing, and I was giving him what I would consider my insight onto how maybe he could do some of the things he was doing a little bit better, just because I knew what I knew, and I knew that he had not become a member of Lifestyles Unlimited yet. So as Bruce was owning the rental property and living in his beautiful new home with his gorgeous bride, they're considering becoming members of Lifestyles Unlimited. But in the meantime, the stock market, we hit coronavirus. I told you about all that stuff, right? So stock market drops, stock market comes back. And then somewhere in the neighborhood of, let's just say, July of 2020, all of a sudden, the stock market decided to rally. It decided to rally a little bit, and it started shooting up to new highs. And everybody was going, "This is awesome. We're in a lockdown. We can't go anywhere, but the stock market is making us money." In the back of Bruce's mind, he's going, "This is good. It's actually good I didn't take my money out of there, because now there's more money there." So what this did for Bruce was this kind of solidified in the back of his mind that if he could absorb the risk of staying in that stock market for a period of time until he hits 59.5, he would be able to tap that money without paying the penalty. So his risk is this: ride it out, save 10% of what's in there, hope and pray it doesn't go down. So let's talk about Bruce's stock market journey, shall we? So I mentioned to you in July, all of a sudden it rallies, right? It comes up. It like all of a sudden we break out of the coronavirus V-shaped drop. We did. We broke out of that. And now the market is going up, 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 up. And then we get to a period of around September of 2020. And the market kind of gets to a new high and it goes, "That's it, we're done." And it starts correcting a little bit. Okay, so it comes down in price. Now, a stock trader would tell you, well, that's just the stock market absorbing the acceleration of the gains. That happens frequently. All right, I don't know. I don't know if that's true. I don't know if that's just somebody analyzing numbers and going, this is a law. I think it's more of a theorem. Yeah, I think it's more of a theory, not a law. So as a result of that, the stock market kind of comes back down a little bit, and it was kind of significant, but everybody's like, hey, man, it didn't come down lower than the high before coronavirus hit. So you're fine. So everybody just kind of buckled in, right? And then what happened after that? What happened in September of 2020? Well, the markets, they just started going up and up and up and up and up. As a matter of fact, they went up like 2,500 points in about we'll call it about a 3-4 month period. And it got to a period in February where it peaked. And then it went back down into what people would call a cup-shaped approach to the graph, a cup shape that appeared to have a handle on it. Now, you people that trade stocks, you know what I'm talking about. We're anticipating an actual breakout of the stock based on the fact that it formed what appears to be a pretty solid cup. I mean, this is how people analyze stock charts and determine whether or not that stock chart has got the ability to go where it's supposed to go. So when the NASDAQ was predicted to break out of its little handle, it took like 5 or 6 weeks to break out of the handle. And in doing so, it actually went back down to the lows that it created in the cup. Oh no, what do we do with that? Do we make tea? Well, I'll tell you what, let me explain the rest of the stock chart, and then we're going to get to Bruce's dilemma. Stick around.
Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show. It's time to turn up the volume and fine-tune your passive income plan so you can create the lifestyle you've always wanted.
Welcome back to the show. All right, so we were talking about what was going on with the NASDAQ stock charts from around, around March of 2021, actually February of 2021, up until about let's call it May. The stock market was forming a cup shape, and it was forming what appeared to be a handle. Now, anybody who has studied stock investing, especially long-term stock investing, that's one of those things that you look for a stock that is getting ready to break out. It's one of those telltale signs that people who have studied the markets say that when the stock does this, anticipate that happening. Oh, and by the way, those rules work not only for individual stocks, but they also work for indexes too. So when the stock back in April of 2021 created its handle formation, but that handle failed to materialize anything in the form of a breakout. As a matter of fact, what we saw was increased volume of trading on reduced numbers, which is always a bad sign. That's a bad sign. And then people started to look at the stock and they went, oh, maybe it wasn't a cup with handle after all. Maybe it's a double bottom, because it looks like it's starting to form what's called a double bottom. And if it does that, the chances of it breaking out of that double bottom are even more significant than the chances of it breaking out of a cup with handle formation. So, what do people start doing? Well, they start frothing. They start thinking the stock market is invincible. It's going to go up. So what happened in May of 2021? Well, the stock chart started forming the second saucer shape, so to speak, that created the second bottom. And then when we got to June of 2021, it broke out. It technically broke out. And it broke out on higher volume with upward pricing, which is a good sign. So what has happened since June of this year? Well, the stock market went up. It went up, and it got to a reasonable high in July, and it just kind of went sideways. It just kind of plateaued. And then the best thing for Bruce happened in late August of 2021. The stock market started rising again. And when we got into the early part of September, it had hit that new high that I mentioned at the beginning of the show that was $15,380. And in a matter of 5 weeks, the stock market gave back $1,200 of that value. For every share that Bruce owned, he lost $1,200 in value. Now, technically, you would say he didn't lose anything because it's a phantom loss. It's a equity position. Unless he sells that stock, he doesn't lock in a gain or a loss. As a matter of fact, Bruce is probably going to lock in an overall gain because the stock market is higher now than it's ever been throughout his lifetime that he has been putting money into the stock market. And here's the rub. Here's the poison pill. You ready for it? As Bruce gets closer to his 59-and-a-half-year birthday, Bruce is riding the roller coaster of the stock market. He is totally riding the roller coaster of the stock market. He still has a couple of weeks to go before he hits that magic number. And a lot can happen in 3 weeks. A lot can happen in 3 weeks. I mean, take a look at what's going on in the economy. Take a look at what's going on with inflation. Take a look at what's going on in our borders. Take a look at what's going on with the leadership of this country and what this country is trying to do or not do. And how does all of that affect the stock market? It will have an effect. I can't tell you exactly what the effect is, but I will tell you this. It will have an effect. And Bruce got real nervous there because he was looking at a certain number that he thought he would be able to take out of those accounts. And when that number went down 2 weeks ago, that materially affected his exit strategy. Because at that point, he was not taking as much money out of the stock market as he thought he was going to be able to take out. And every day, Bruce wakes up and he's watching that volatility. Now, the stock market has kind of come back up. It has come back up. But if you monitor stocks, if you've taken the time to learn how to read stock charts, there are two things in this stock chart that I'm looking at over the last 6-week period that really concerns me. See, when the market goes down, the volume goes up. But when the market comes back up, the volume isn't as great as it was when the market went down. Do you know what that means? That is an indication of net selling. That is an indication of people dumping shares on the market because there are massive players out there that have a better understanding of the markets than you and I do, who might be thinking, this is it. This is the end of the line. It is time for us to start reducing certain shares of stocks and selling those off, going into a cash position, and then taking a look at the stocks that we want to buy and position ourselves to buy those stocks when it's appropriate to do that. But that creates volatility for Bruce. Now, I'll tell you, Bruce is going to be just fine. He's going to be just fine because at the end of the day, he's got a pretty solid handle on how much money is going to come out of that 401k. And he has a plan. He has a strategy. We talked about it on Saturday, as a matter of fact, as we were walking through the beautiful hill country together, just hanging out, enjoying the nice weather. And he said, you know, Al, I'm going to be able to get into 3 more single-family deals, and I've got a couple of multifamily deals that I'm going to invest in as a passive. And as soon as I get my money out of that 401k, I can get started on those 3 additional single families, and I can get started on programming that money in with other Lifestyles members to be a passive investor in multifamily apartments. Because here is the goal that Bruce is about ready to achieve. provided the stock market doesn't do anything crazy like it did when we went into coronavirus. Bruce is looking at a good chunk of money, and that money will be repurposed. Once he takes down his next 3 single-family properties, with the income streams that come from those 3 single-family properties, when he adds it to the income streams that he's receiving off of the 2 properties he's already bought as a Lifestyles member and the other rental property that he had when he was not a Lifestyles member, but he still owns it. Once he puts all of that cash flow together, Leanne is retired. Yeah, Leanne is retired. As a matter of fact, they have already put a mark on their calendar for what that retirement date is going to be. So Leanne has already joined the group of Lifestyles Unlimited members who have effectively retired themselves just by correctly investing in real estate. And the beautiful thing for Leanne is this. What it's going to do for her, it's going to free up a lot of her time. A lot of her time. Because right now she's working at a nonprofit basically as their comptroller. Trust me, she works for a lot less money than she's worth. But when you're working for nonprofits that are doing the business of helping other people, you're willing to take a lesser pay. But she's going to be able to step away from that full-time role. She's going to be able to continue to volunteer on a part-time basis without pay, which is really cool because she's able to keep doing the work that she loves to do. And they've recently relocated her mother, Shirley, from Hawaii. She's now a Texan. And part of the game plan is to provide assistance for Shirley. Because Shirley, she's in her late 70s. As a matter of fact, they were always planning to bring her out, but they couldn't. But now they can. And it's amazing. These are the kind of results that you can get. But you have to be careful because if you're like Bruce and you're trying to time the stock market, man, you don't have any control over that. But you do have control over your real estate. And to get started, go to lifestylesunlimitedworkshop.com.
The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.